Hello, I'm Bernard Hickey from interest.co.nz and welcome to the Roost Mortgage Brokers Home Loan Affordability Report for February. Now this is a report that we do that's sponsored by Roost Mortgage Brokers, which looks at how much of your take-home pay you need to service a typical mortgage on a typical house. And we measure this every month. We look at what's happening with interest rates, what's happening with house prices, and what's happening with incomes. And this month, in February, we've seen a slight improvement in home loan affordability across the nation. Now, we do reports in each of the different areas and regions, but across the nation we've seen a slight improvement. It's worth going to the charts, the interactive charts that we have at the bottom of this article underneath the video, and you can have a play to see which region you're in, what's happening to your home loan affordability, and what's happened over the last 5 or 6 years. Now, let's have a look here at what's happening to the National Home Loan Affordability Report. What you can see here is that home loan affordability has improved. Now that's where the line goes down. You may wonder, how can anything improve when it goes down? Well, that's the proportion of after-tax pay needed to service an 80% mortgage on a median house. And you can see here, obviously, at the top of the housing boom, when house prices were at their peaks, when interest rates were over 10%, it took more than 80% of your take-home pay, a single median take-home pay, to afford an 80% mortgage on the median house in New Zealand. Not very sustainable for those people on one income. Now, obviously, as interest rates slumped and as house prices fell, we saw a significant improvement in affordability, down here to 54% in January of 2009. Then we saw house prices rebound a bit, and however, over the last few months, in the last year or so, we've seen a significant improvement in housing affordability. Now that's because interest rates have stayed low and incomes have been slowly nibbling away there. And in the last month, we've seen improvement to 51.9% of a single after-tax income to afford an 80% mortgage on a median house nationally. But of course, that's nationally, and it's different region by region. Northland, and you can see the blue line is the main a national measure, and you can see whether your region is below, which means more affordable than the national part, or above. And you can see here that Northland has improved significantly versus the main national measure. Auckland, of course, much less affordable than the national measure, and there has been some deterioration in the last few months, although in the last month or so for Auckland slightly better. The other main areas, Wellington, and you can see here that affordability has slightly worsened in the last few months. That's partly due to house prices, and you can see here that things have improved significantly, though, over the last couple of years. However, there are some areas where house prices are increasing and where affordability is getting worse, i.e. the line's going up. And Christchurch is one of those. It's getting closer to the median, in part because house prices are rising. There's a lack of supply, obviously, with the earthquake destroying so many houses. So there we have it. The Roost Mortgage Brokers Home Loan Affordability Report for February. I'm Bernard Hickey for interest.co.nz.